10-year yield, man, it's working on impossible seventh straight day of gains. It's at the highest level since October 2022. Dollar 5 straight weeks in a row. And inflation reports keep coming in higher. We heard about ours a couple weeks ago. UK inflation report. I didn't even look at the European inflation report, but I'm guessing it came in high too. So this is the thing that we're up against right about now. And then you got the Fed coming out with their meeting minutes talking about inflation is still high and they're worried about it. This is the main reason why we got the markets where we are right now. And then earlier this week, we heard from another ratings company talking about banks, and there's an issue. Is there a larger issue ahead for banks? Is there something that we don't know about that we need to be worried about? What do you guys think?
I don't know how banks... I don't get how banks could possibly mismanage higher rates. I really don't get it.
Because it's such a no-brainer, easy thing. You're just playing for it. It's like always betting on black or red on a roulette table.
You wait for 20 years for rates to go higher because it's free freaking money for you, and then when it happens, you completely butcher it. I just don't get it.
I agree. That's the thing that confuses me too.
I don't get it.
Yeah.
I don't get it at all. It's free money. It's literally free money.
Right. It's like a free call.
It's a free call, exactly.
It's a free call and the stock went higher.
You go from 3 basis points to 30 basis points. It's like it's brain dead stuff. And banks screw it up somehow. That's how bad banks are. They're just blows my mind.
Yeah, it's really weird. I don't understand it. But nevertheless, Dow Jones, Russell 2000 at 1 month lows, NASDAQ and S&P at 2 month lows. And it's not looking pretty. And let's move to the next slide. One of many different slides that are going to be, it's not going to be that pretty today. 10-year yield and 30-year yield. 10-year yield just made just below its October highs, which was 4.326 back then. And this is yesterday's closing prices, of course, when we look at 4.271. And then 30-year yield hit a new high more recently. So we got yields taken off. Of course, everybody's hearing about mortgage rates, 30-year mortgage rates, highest in 21 years or so. It's a precarious time when you're talking about yields, and it's scary. It's scaring the market now. All of a sudden, I mean, yields have been high for a while, but are we? It seems like we're going to be in this higher for longer state, basically. And the market seemed to sort of come to grips with that this week, it appears. That's what it felt like.
I agree.
Let's move ahead to the next slide. Volatility risk premium. Love pulling this thing up. This is VIX minus historical vol. When this thing is higher, VIX is higher than historical vol. Things are a little bit, there's obviously a little bit nervousness in the market, not as much movements quite yet. If this thing is lower, we usually see a lot more movements, big moves, like we saw late last year in October and November when markets were on lows. So right now we're seeing a little bit of volatility pick up, which is actually good. We've been waiting for this for a while. I know VIX is only 17. It's not like 20 or 25, but we take what we can get. I don't know. I mean, you know, we've had low volatility for quite some time now. So to see this is at least a little bit helpful. And you should be seeing a few more ideas out there. You know what I'm saying?
Yeah, and we're past earnings, which is nice too. So, you know, you've opened up a plethora of stocks and you get a higher implied volatility to kept your powder dry or reduce some of your positions. I agree with you. A vol up 20% or so the last couple of days certainly makes things a lot more advantageous for trading.
Yeah. And spoken like a true gentleman, because I know you and I are always talking about finding different ideas, of course, for your podcast. A little plug there for you. I know you're always looking for different ideas. It's hard sometimes, right? I mean, I think people need to appreciate that. Sometimes it's a little difficult finding good ideas that you're willing to share with the world in those type of situations when volatility is not that high or when there's earnings, which you try to avoid. But now I think it's going to be a little bit better.
Yep, totally agree.
Yeah. Let's move ahead, please. Correlation is on the rise too, of course. This is 1 month correlation and 3 month correlation. So if you're doing the math, we already said what's going on with the yields, dollars 5 weeks in a row. All of a sudden you're seeing vol pick up a little bit. You're seeing correlation pick up a little bit. Really no surprises here. This is what happens. You know, when markets get a little scary, volatility picks up, you get correlation picking up. So this even lets you more know there should be a few more ideas out there.
Yeah.
What is the red? What's the red?
Oh,
what is it?
3 month. These are disseminated by the SIBO. This is just 1 month correlation and 3 month correlation. Just looking at
what?
Of basically equity stocks. So anything in the S&P 500. And so, we all know, like, when markets go down, everything kind of goes to at the same time, right? Like when you have right now, we've seen a lot of equity names go down. You're even starting to see Bitcoin start to move a little bit on this, which again, that's usually trades pretty independent. But when things get a little spooky, everything kind of rolls together, right?
Got it. Okay.
And so I guess I was talking about this too recently. Like, this is a time where people start looking at that correlation trade, if you will. So S&P 500, say you pick out the top 10 to 15 names, say vol picks up in those, and people can go out and sell vol. However you want to do it, you can go out and sell vol in the components and buy vol in the S&P, which, again, just if you're worried about a complete meltdown in markets, you're protected on one end while you're selling vol in another, or vice versa. You can flip the whole thing. But I've never been in love with that trade, but I know people who used to do that trade for a while there. So let's move ahead. Finally, XLE and XLK, when you're looking at energy and tech, these are moving in different directions recently. You guys notice this?
Of course, absolutely.
For sure.
You're looking to turn it around, or you're going to let it go?
I'm not buying tech. I mean, energy might come down, but I'm not.
Oil.
Yeah, I'm not buying. I'm not buying tech. So I don't. I don't think oil's going anywhere from here. I'm bearish on it. So
I didn't think you were. I just like to ask the questions that the people want to know. The people tell me the questions. I'm just a conduit. You know what I mean? Like, the people tell me the questions, I ask them.
Yeah. I think that's going to really narrow.
Yeah. What's your shoe size? The people ask me that too. What's your shoe size?
17.
Let's move ahead. Talk about me in the hat. 17. Jesus Christ. Gold has had 9 straight days of lower highs and lower lows. It's getting really weak, of course. But when you got dollar doing what it's doing, you got yields doing what it's doing, gold is going to do that. Bitcoin and Ether got slammed. They got monkey hammered. You ever heard this before?
No. What's a monkey hammer?
No, me either.
It's just like getting beat up. They got beat up. Yeah, it's got beat up.
I think that's kind of like the old, a monkey hammers when they used to, hammer the monkey's head on the table for food.
How many monkey heads have you eaten? Because I've had one, but I'm just curious how many you've eaten.
Isn't that what it's from?
Beth is really close to saying.
I would probably go with a monkey wrench. I don't know how many monkeys people are eating, but I did do it in Chinatown one time with my father, which I try to regret now, but sure. Okay.
What'd you do in Chinatown with your father?
In a poop. Yeah. Go ahead.
No, wait, you go ahead.
I was at a table with a bunch of wise guys, and we ordered a poo-poo platter in Chinatown. And on the top of the poo-poo platter of food was this one congealed type of thing on top, and it was monkey brains. I had no idea. And all the guys said it's a delicacy. I should try it. I was a young man, probably around 12 or so, and I ate it. And then they told me it was monkey brains.
Was it really monkey brains, or were they just?
Yes, it was really monkey brains.
I can hear it in your voice. You're still upset.
The only reason I say it's a monkey hammer is because what it used to do is, like, there'd be certain exotic restaurants where they would put a monkey in the top, and then they would hammer his head just to get the brains out.
You guys are blowing my mind right now. I thought this only existed in Indiana Jones.
That's why when you said monkey hammered, I thought that's what you were talking about. I didn't know. I never knew anybody had actually done that, but that's what I heard.
Well, when somebody says Bitcoin and Ether got monkey hammered at 2 month lows, it just means they got rocked. This is great, though. This is great. I bet the chat is on fire right about now. Hawaiian Electric, HE, has been hit with multiple lawsuits. Stocks have been rocked. Bonds have been cut to junk. Similar thing that we saw in PCG. PCG is the ticker, but PG&E in California during their wildfires, similar deal. So this is crazy. Vol was ridiculous. It was like 200 IVR for a bit, but this is one of those type it's been hard to trade. I'm sure some people probably traded when it was 19, 20. Last I saw, stock was 11. I think it was up 70% this morning, though. It's been wild. U.S. Steel rejected a $7.25 billion to be exact, dollar takeover bid from CLF. It's now considering another bid. I haven't really seen any other steel names in the industry move. I thought maybe they would on this. Really hadn't been any movement, though, but something to keep an eye on. And then finally, research, market measure, win rates and risk in ETF strategies. Check that out.
Beautiful. Good job. Very good job. Well, we're going to take a quick 90-second break. I'll tell you that story another day. There's more to it. We'll be back in 90 seconds. We got the opening bell next.